Whales brought the fall to $42,000, according to two main Bitcoin price metrics, indicating that BTC may be on the way to a fresh all-time peak by mid-June. Whales purchased the fall on futures markets when Bitcoin checked the $43,000 support for the third day in a row. The Bitcoin futures premium has dropped to its lowest amount in 6 months, despite no major price improvement. This measure corresponds to a low of $17,600 on December 11, 2020, just 10 days after hitting an all-time peak of $19,915. Derivatives activity sparked a 95% surge in 23 days in December 2020, propelling Bitcoin to a record peak of $42,000. In both cases, speculation of possibly unfavorable U.S. legislation played a key role in the market decline, in addition to the futures premium bottoming. There are concerns about money trafficking, the Bank Secrecy Act, the usage of digital currency for illegal transfers, consumer security, and the like, U.S. Treasury Secretary Janet Yellen said at the Washington Square Journal CEO Council Summit on May 4. On May 6, U.S. Securities and Exchange Commission Chair Gary Gensler proposed to Congress that the crypto room be given more regulatory scrutiny. Right now, there isn't a market regulator around these crypto markets, so there's still no defense against theft or manipulation, according to Gensler. The Securities and Exchange Commission of the United States issued an investor warning on May 11 outlining the risks of mutual funds with exposure to Bitcoin futures, adding to the regulatory haze. When Bitcoin reached an all-time high of $19,915 on December 1, the futures premium spiked past 15%, signaling a price turnaround. While the 8% low seems to be close to the previous month's average, it is small in comparison to Bitcoin's 90% rally in 2 months. See how the futures premium jumped to 15% as soon as the $17,600 mark showed its strength, signaling optimism. The new scenario started off differently, when the industry was too bullish from the beginning. However, the condition has shifted dramatically in the last week, with Bitcoin down 26%. The futures premium fell to its lowest level in 6 months, at 8%, as a result of this change. Whales purchased vigorously below $43,000. The bearish mood on May 17 just lasted a few days, as whales suddenly knew it was time to purchase the dip. Clients' combined positions, including margin, perpetual, and futures contracts, are used to quantify the top traders' long to short metric. By combining data from different markets, this statistic gives a more comprehensive picture of experienced traders' successful net roll. As Bitcoin checked the $43,000 support in the early hours of May 17, top traders on OKX jumped from a 1.62 long to short ratio on May 16 to a 2.74 high. According to the numbers, whales and institutional investors had long positions nearly 3 times greater than short positions, which is unusual. Though the bullish bet persists, it signifies the end of the previous week's pattern. MicroStrategy, a business analytics company, has purchased another $10 million worth of Bitcoin at an average cost of $43,663. While it could be premature to call the correction process over, there appears to be sufficient proof of the futures market bottoming and whales' aggressive purchasing below $43,000. Bitcoin could hit $83,000 in mid-June if history repeats itself and a 95% rally follows suit.